This is video number 2 for the weekend. Before we get into the next 10 ETFs, here's the Volatility Index, the Vix, and it is quite a picture. We can see here in recent history, by recent I mean from the financial crisis forward, these extreme... Oh, hello. That's my rice cooker letting me know that the rice is ready, and also that the volatility chart is plunged. It's a dual function. I don't know what genius came up with the idea that a rice cooker would make merry tunes, but it's a loud one. I'm not editing it out. Anyway, this has bounced in this tremendous range from like 10 to 90. Of course, the tippity top, the financial crisis, was October 24, 89.53. My God, those were the days. Then down here was the nadir of this thing. 8.56 on around about Thanksgiving of 2017. And since then, since that bottom, we have this uptrend, which, how about that? On Friday, we tagged it. Isn't that something? So this might be as low as she goes. We'll see. It's certainly not poised for too many lower prices. It could break that trend, of course, but as of the past 4 years or so, it has maintained above that line. And of course, this all too brief thrill fest right here pushed us back toward the kinds of highs we saw during the financial crisis. But that has been beaten down and beaten down and beaten down and beaten down to the lowest level, literally since before COVID was even a thing. Having said that, let's look at the next 10 ETFs. Here is ITB, the home building ETF here, and zooming in, we can see that this Head and Shoulders is still intact. We've got a neckline right there at 68.71. The small caps, this is another heartbreaker. This had been poised for a wonderful topping pattern, but that got aborted as of May 11, and it has instead been hammering out what might be, it's a range at this point, but it might ultimately break out above that 233.75 level. That was the tippity top back here on March 15. We approached it very closely on the June 9 before falling, and we're pulling the same cute little shtick right now on this. Hasn't broken out yet. Transports, the this is real estate, IYR. Steady Freddy. Uptrend well intact. No risk of breaking that. Here's the transports, IYT. This one has broken down. I assume because of soaring energy costs, but it broke its trend line weeks ago. And here's our topping pattern. And here's a pretty good little resistance area, 263.69. J&K, the junk bond. You wouldn't know it from this. These look like the safest things in the universe. But here's so-called J&K lifetime high on this one. And it was just a few months ago, when everything was still super supported, that it was down here. But it's been steadily pushing higher. Very, very healthy looking. The regional banks, KBE, this had a good week, but it has been spent virtually the entire year just meandering between around 50 and 55. This boring, slow range thing. And the big news, of course, for Friday's open was that the banks passed their stress test, which is not a surprise to anybody. Here's LQD, another BlackRock bond fund. Not very exciting. We topped out on this one. Maybe we've got a lower high here, but I don't think I've ever touched this or traded it in my life. Here's the mid-caps, MDY. Long pattern here, and then a smaller wedge here, which was broken. And we have very similar to what we had with the diamonds, which is the broken wedge, the topping pattern in formation, but unlike the Dow, has not broken beneath the support. 475.11 is support. It got close. pushed toward it, bounced, pushed toward it, bounced. So really we can say not much more than it's just range bound at this point. The OEF, that is the S&P 100. Here we've also got a broken wedge, and we've got a smaller pattern right here, you can see, like so, and it managed to squeak just a skosh above it on Friday. It's not a particularly big or important trend line, though. And the last of these 10 is the cubes, QQQ, which incredibly actually managed a red number on Friday, but it's not exactly very far below its own lifetime highs. We can see here that on Tuesday, it pushed above its own resistance line, stayed above it for Wednesday, Thursday, and Friday. A little bearish engulfing pattern there. So it'll be mildly interesting to see if it gets to the other side of that trend line again. But of course, earnings is the next major tidal wave that should push things around, but that is several weeks away. We've got a normal week next week, 5 days, but it should probably be pretty quiet volume-wise, as if things haven't been quiet already, but like even more dead than they are now. Then we got the 3-day weekend, 4-day week afterwards, and then earnings will start tiptoe out. So in about 4 weeks, it'll be rocking and rolling again quite heavily. All right, that's it for this 10. I'll see you in video number 3.